Morning, guys. Actually, it's not morning. Well, it's still morning, or it's 11 something. Anyway, I want to do a comparison between the two Ymag funds that are more diversified in their performance since inception, basically. I'm not comparing specific time periods, just the inception price to current price. If you look at Ymax, the fund of funds, you'll see it's down on a share price by over 40%, right? If you look at YMAG, which is the MAG 7 one, which is diversified also, but not to the extreme that it is, YMAX is, it's down far less by 24%. Now, if we look at the returns on the two, if the top part of this, and my fat head out of the way. Anyway, if you look at the top part of this, that's with dividends reinvested. You'll see that YMAG is outperforming YMAX significantly. Your average annual total return is 29% for YMAG as opposed to YMAX at only 19%. And if you look at with dividends not reinvested, which is the bottom part of this, your average annual total return is 21% for YMAG and only 13% for YMAX. And you can see that starting share price that has listed there at 1989 for YMAG with the ending share price of 1516, whereas YMAX NAV erosion is far worse. And so the holdings have a lot to do with that. So YMAG being the MAG 7, the MAG 7 has done really great. So what I do with YMAG, I'm not telling you, this isn't financial advice. I have to give that disclaimer because I had a channel removed because they were saying I was scammy. Fuck you, YouTube. Anyway, I'm just pulling up facts there, YouTube. Okay, look at it. These are facts. If your little algorithm can't figure out that I'm pulling up facts, I don't know what to do, dude. You guys are fucked up. Anyway, so looking at it, you can see the facts of the matter since inception. You can see the share price, the NAV erosion is real for both funds, but it's far less for YMAG because it had the MAG 7 as an underline, whereas YMAX is overly diversified. So maybe you get more in the way of dividend yield at points with YMAX because of the volatile underlying, but you can see in the end run of things, your underlying really matters the most and how your underlying performs. So, MAG 7 obviously performed really well, and that's why I like YMAG. I'd rather trade the MAG 7 during pullbacks. So when you get these pullbacks in the market, followed by VIX spikes, the way I like to trade YMAG, and I've done it several times now, is by selling cash secured puts. I'm not trying to buy it at the top, or because I think obviously looking at it from 1989 since inception down to $15.16, it's got NAV erosion. The total returns are good though. If you were just not going to live off the dividends, you would accrue quite a decent return off since inception. Even if you didn't reinvest dividends, you had a 21% return on an annual basis since inception. So I like that, and so that's why I trade YMAG because it holds a great underlying. You could have like two or three of the MAG 7 doing bad, but the rest of them are doing fine, and so it's got more stability as opposed to YMAX. So I trade YMAG, but I don't buy shares. I mean, you could just buy shares and during dips or fear in the market where it gets extreme pullbacks and swing trade it or just hold on to it even. But with me, I like to trade it with options because I like to be liquid, so I'm in and out on it on a regular basis. And it's been a really lucrative trade for me, and that's why I trade it. Now, if you want to compare it to one of the more popular funds like Ulti, you can see that it's kicked Ulti's butt since inception. Now, periods of time where Ulti outperformed maybe might have been like shorter duration time periods from April to now, or not now, but April until like 30 days after, 60 days, up to 60 days after fucking the lows of April. But Ulti's again is smacked. Its NAV erosion is a real thing, and so I wouldn't touch that with anything. Basically, I like YMAG for trading. It's a pretty lucrative trade for me, and a 10K investment, you can see what it would have done. The black line, if you reinvested dividends, you're up quite a bit. YMAX is the blue line, so it did a a lot worse on the total returns, even with dividends reinvested. There are times when they're running neck and neck, though. You could see that. So you could technically trade either one of those funds, but I like the concentration of YMAG because you get that outside move and recovery during pullbacks or corrections in the market with the Mag 7 because they're going to rotate in the better capitalized companies at some point in time after a pullback or a correction. And with that VIX spike, your option premiums jack up significantly when you're trading YMAG. And it's been fairly liquid for me. I just sold an option today I have a 15 strike that expires in January, and I got paid $110 for it. So when you do sell puts on something like cash secure puts on something like YMAG, because you have a wide gap between the bid and ask, you got to use limit orders. So I try to get at the very top of the extreme on the ask price, trying to get at the top, and I just drop it in increments until I get a fill. And then I won't do all my contracts at one time. I'll do one or two contracts at a time during pullbacks, and I'll be prepared to average down, or rather average up in my premium received if the market continues to dump or the Mag 7 continues to pull back or correct. And I've done that multiple times in the past where I've had as many as 2 to 3 dozen contracts on YMAG. And then within a week, when things bounce, even a couple of days, things would bounce back. I'd be able to buy to close them back for a substantial gain. And that's why I like YMAG as far as the yield max funds go. There are liquid yield max funds like Misty and Ulti are liquid, but they have such extreme NAV erosion, I don't want to touch them. YMAG has NAV erosion, but not on the same level because it just has a better underlying. And so that's why I trade it. Anyway, guys, like I said, not financial advice. Just one of the things I've been trading in and out of. And I can handle some NAV erosion so long as total returns are good, but I just don't want to see massive NAV erosion like you see in the case of YMAX, or even to a greater degree in funds like Ulti or Misty. I'd rather stay with the more diversified, better underlined, which is what you have with YMAG. It's diversified, not as extreme as YMAX, but it has a really stellar underline. So why not? It's a no-brainer to me to trade something like this. All right, guys, just my 2 cents that I have to say about one of the things I do trade in Yield Max, and that's YMAG. All right, take care. Bye.